Good morning. Today is May 9th, 2010, and happy Mother's Day to everybody. This is Trading High Probabilities. Anyhow, let's take a quick look back and look at a few things that happened last week and the week before. At this point right here, we have our Inside2 day. This, we said, if it breaks this low, we're going to continue down. Little did we know that this on this purple bar, this was the kicker. This is what produced the shock to everybody. This is what set everything off in motion. That we said, okay, this day on last Tuesday is the game changer. This is what's changing market sentiment. You could put your shorts in and take everything off the tables that was long, and that's what we said back here on in this area here, to take all your longs off the table and get ready to go short, or for aggressive traders to go short and put your stops up here. For longer term traders that are trading with us and are still holding their short positions, this market drop should not go above this purple bar at this point. And we added some more positions here. In our newsletter, we said to take your stops off on that big down day. We told you to take your targets off down here if it didn't already hit a target, and there's always another day to enter in. For those that of you did, great. If you didn't, that's okay, because it's going to probably just gyrate around here. It might go up, might come down, and then just drop again. Let's go back in time real quick and take a look. But basically, what the kicker is when you have a trending market up, and the prior day, this day right here, you end towards the high of the day, which it did, and the following day, the kicker day, gaps down, doesn't fill the gap, or at least comes close to the opening price, but does not go into that day's bar, and continues down and has a nice long day down. Well, that's a shock. Everyone's going to try to get out. The next day we had a little bit of another drop down, a little consolidation. Didn't really go anywhere. And, well, you know what happened last Thursday. And if you take a look back, let's just look back in time. And we're going to go all the way back to, let's see here. Here we go. This day right here was June 26th of 2008. And take a look what happened. That dropped down, but what's more important is this day back here. This day was January 4th, 2008, and look how it just kept dropping and produced another kicker and just kept dropping. This back on November 7th of 2007. This was almost a kicker if it wasn't for this tail coming up, but it was pretty close. This was a game changer. At that point, we don't have a colored bar here because of this wick that came up, but that was a game changer. But yeah, let's catch up to today. And the Qs closed on 45.41, and the DIA we're looking at 103.78, or 10,380 on the Dow Jones. We see in this 101. Let me just squeeze this together. You see this area here back on February 12th, between February 12th and February 16th that weekend. That gap has not been filled. So let's just draw a horizontal line there. And we're looking right here for this price bar here. Yes, it filled the gap, but this was an anomaly. And it just popped right up. We're looking for something to really come down into this level. And then once it fills that gap, we're expecting some bounce up before we continue on down. This is a game changer. I know you hear the talking heads on CNBC saying, "Buy, now's the time to buy. It's a great deal. It's just a minor correction." You know what? I'm going by the technicals. I'm looking at what's going on in the world, and even if Germany helps to bail out Greece, it's not the solution yet, and they still have major problems ahead of them. But that's another story. We're mainly on technicals here. So as far as what's happening, we're going to be calling out trades, of course, but over the next day or two, it's going to be pretty difficult to call out any trades to take long or short. And sometimes the best thing to do is just to sit on your hands and wait for that opportunity. We're not seeing any divergences. We're not seeing any type of bounces yet. We're still a ways away from support. We're a ways away from resistance. I mean, we have resistance, geez, all the way up here, and our support, which we drew a line. You could basically say support's around here. Um, we're a ways away. I mean, let's see what happens Monday and Tuesday. So don't be surprised if you don't hear too many calls being called out for the next day or two. Let's just see what kind of price action. I could see a knee-jerk reaction to the downside again on Monday morning, and then a little pop up again. But what a roller coaster it's been! It's been just havoc on traders, even the professional traders. I think we probably have the biggest roller coaster in the world, and that being the U.S. stock market. And that it has been a wild, wild and crazy ride. So as far as any new trades, keep on your toes, have some tight stops. This market could really whip you around. Although I take that back, those tight stops you might have to widen them out, so you may have to reduce your risk reward a little bit if that fits your plan. But give it some room on the initial stop, and then tighten up afterwards. Once you have that decent profit, move it break even as soon as possible, plus a couple of pennies, so you can eke out a little bit of a profit in case it does go against you. And we typically look for those trending lines. Let me show you one here. I just pulled up a 5-minute on the Qs, and here's one we took the other day, where we just took a trend line here. And what we did is, once we saw this happen, this second bar here, we just drew this trend line, and as it came into here, we took another short, or one of our last Friday, and we just took a little scalp right down. It kind of came back up, and we didn't really make much out of it because it was kind of choppy. We didn't have enough room. It was towards the end, so it was just a test to see what would happen. But anyhow, those are the kind of things we look at once you have some kind of trend developing. Look at the volume, look at your moving averages, look at your MACDs. Here's our MACDs that we use, and as you can see, before we wrap this up really quick, we really don't have any divergences. You see this big drop, and in the big scheme of things, this MACD can go a lot lower. With what's going on, yeah, we could see a little bit of a bounce, but again, back here we saw this divergence. We called this top over here, but this confirmed it because of this divergence coming down here in the MACDs. Price was still going up, and we just went ahead and we took it short once we caught this. You never know. I mean, the divergence, as we said last time, the bigger the divergence, the harder the fall is going to be. So let's just see what happens and what's to come. So be careful out there. It's getting to be a little bit wild, and we'll talk to you next weekend. Happy trading.